Hi, this is Chris Morton with another episode of Wine and Real Estate TV. Our guest today is Brandon Mears from Mason-McDuffie Mortgage. Brandon, thank you for your time today.
My pleasure. Thank you, Chris. Thanks for having me.
Absolutely, absolutely. Our topic today is reasons why now, early 2015, is a really good time to be buying a house versus waiting 6 months, 12 months, or 24 months.
One of the questions I have for you, Chris, basically is the obvious. Real estate continues to appreciate.
Right.
So what are one of the reasons why it would be a good idea for someone to buy a house
Absolutely
right now?
valid question. I think the number one reason we're seeing right now is inventory is really, really low. We were most of 2014 very low inventory. 2015 has been no better. We're seeing houses sell in a matter of days. So I think that's a really good reason to buy, is that if you don't go ahead and jump on things now and get your ducks in a row, you're going to end up getting in to the spring buying market, which sounds like there'd be a lot more inventory, but I don't think there's going to be. Every sign indicates there's not going to be inventory, and you're going to be competing with multiple people. So now is really, really a good time to get out there and be looking at buying a home, definitely in my mind. I'm seeing or hearing rumblings that interest rates may be an issue. What are you seeing on your end?
Absolutely. Interest rates are extremely low right now. They're extremely beneficial to buyers right now. We're at about 3.5% for a 30-year fixed rate mortgage. Okay,
very good still.
Exactly. Most of the things we're getting from the experts say that by the end of 2015 we could be at 4.5%. And in case that doesn't seem like a huge difference.
Yeah, I would say that's not any big deal. 1%.
Absolutely. Until you sort of see the numbers. If you were to take out a $250,000 loan amount, just to throw that number out there, at 3.5%, you'd pay about $154,000 in interest over the life of that loan.
Over 30 years?
Exactly. Okay. If the rate were to go to 4.5%, you're looking at over $200,000.
So $50,000 more just because rates went up.
1%.
Wow.
Exactly.
Wow.
Exactly. And as far as you'll actually see a monthly increase as well. The monthly increase from 1% rate increase would be about $145 in your principal and interest payment.
So $145 and $50,000 extra dollars of interest. That seems like that might push some people out of being able to afford that $250,000. And incidentally, $250,000 is an average, is designated as about the average. $240,000, $250,000 in the triangle, Raleigh, Durham, Chapel Hill, Cary area. That's an average home.
Okay.
So if you're not able to afford that, then you're having to go down to the next level, which is still a nice home, but it may not have all the bells and whistles you want.
Absolutely.
I would assume that could happen, that you could get kicked down.
That will affect your debt to income ratio and sort of what you're bringing in and what you're paying out every month. So that could absolutely push you out of being able to buy the home that you want, just because rates went up 1%. So it doesn't seem like a huge increase, but it could definitely have an effect.
Right. The other thing I can imagine, or things that I'm hearing could affect people's ability to buy, is it appears that home values are going up and appreciating. I was reading a survey, and I don't know if you're familiar with it, from I think they interviewed 100 economists, and they asked them what they thought the rates were going to be, not rates, but home values were going to do in the next 5 years. And every single one of them agreed it was going to increase or appreciate over the next 5 years. The range was somewhere between 15 and 33% increase in home value over the next 5 years, which equates to about 2 to 3% every single year going up.
That's great. That's great. Which makes it even more important for someone to really be looking now while they can maybe buy more house for a more affordable price.
Absolutely. And that appreciation is certainly great if you own a home, not so great if you're 24 months from now and you're looking to buy a home and you've now been priced down even more. Interest rates are higher, your value of what you can afford is less, so definitely not such a good scenario to wait to buy a home.
Absolutely. And renting versus buying.
Renting, yes.
That seems to be one of the things on everyone's mind as well.
Right.
A lot of people don't think they can afford a home.
Right.
They'd much rather sort of stick where they are and pay someone else's mortgage.
I guess that is true.
Right, but I think until you actually talk to a mortgage professional, a lot of people don't have any idea that they would be able to, as much as they're paying in rent, they can afford a mortgage payment for that same amount or less, and be building up their own personal wealth rather than putting personal wealth in someone else's pocket. There's
an old joke, so to speak, but it's a truism more than anything in the real estate industry, that if you're renting, the only difference between buying a home and renting a home is whose mortgage you're paying. If you're renting, you're paying the landlord's mortgage, and if you own a home, you're paying your mortgage.
Absolutely, I know, and now's a good time for folks to really start to think about, make those changes now before they get locked into another long lease somewhere. With rates as low as they are, homes as affordable as they are, and really talk to professionals, talk to your real estate agent, talk to your mortgage professional.
Right.
And see what you can do, and you may be surprised.
Which brings me to another topic, sort of. I think a lot of people are still under the mistaken impression that they need to go find their ideal home before they talk to a mortgage broker, mortgage professional like yourself. Where, in my mind, you sort of need to make sure all your ducks are in a row ahead of time and find out what the facts are before you go out and find that home. What would you say to that?
Absolutely, I cannot stress that enough. I think people may wait till the last minute sometimes, and they find the place they want and put the cart before the horse, so to speak. And then they, when we get down the road in the process, figure out that there's something on their credit that's wrong, or their credit score is not as high as they thought it was, and may not be within reach. It's best to talk to somebody up front before you start looking, because you don't want to get your heart set on something and then get disappointed. Exactly. And also, it takes a lot of effort for folks like us, professionals like us, to really get out there and help people find their place. So I want to make sure that everyone does their due diligence to be prepared, and and so the process is seamless.
What would you recommend to people if they're thinking about buying a home, they want to get all their ducks in a row, as you say? How much timeline do you want to have? When do they need to come talk to you before they start looking at going out and house hunting for that dream home?
I would say at least 30 days in advance, just to make sure that we pull credit and make sure there are no surprises. Any mortgage professional will be able to work with you in helping to correct those situations. A lot of us have credit repair people that we work with all the time, so get you to the right folks, get everything straightened out, and at least 30 days, 30 to 60 days, probably preferable, I would think, but 30 days minimum.
What would you say typically, and I know there's no such thing as a typical in this situation, but someone comes into you into you to talk with you. They've got some negative things on their credit report that are errors. They didn't do it, and they got to get corrected. How long does it take for something like that to get corrected?
That's usually, if it has to go through a credit repair specialist, usually 90 days, something like that. A lot of things. It's become a lot easier for consumers to fix their own credit these days. So you actually are mostly capable of writing to the creditor themselves. And
something you could help them do.
Exactly, absolutely. We're happy to help them in any way that we can. A lot of it could be corrected that way, but if it really does have to be challenged with the creditor, there are repair specialists out there that help you with that. There's also I've seen some self-paced programs that are sort of exactly. Everything's made available to you if you just want to do it yourself. Otherwise, if you'd rather just turn it over, there are folks that'll do that for you.
Cool.
Absolutely.
So it sounds like really the answer to how soon should you be talking to someone before you go to look at a house is as soon as possible.
Yes, exactly. Get started early on, and that way the whole process will be a whole lot smoother.
Fantastic, fantastic. Well, now we need to segue over to that segment of the show where it's a wine that we're tasting. We appreciate your time and your expertise about buying a home. Our wine today is Cake Shiraz. It's an Australian wine. Very red, Shiraz, of course, being a red wine. Layer Cake is an appropriate name for this wine. It's very dark and dense, and not a light white wine drinker's wine. This is very much a big red drinker's wine. So anyway, Brandon, thank you for your help today.
My pleasure. Thank you, Chris. Cheers.
Good stuff. Very, very good stuff. Tell everyone how they can get in touch with you if they want to get the ball rolling to buy a home.
Absolutely. Thank you. Again, I'm with Mason-McDuffie Mortgage Corporation. On the web, we are mmcdcorp.com. My phone number is 919-435-4344. If you'd like to call me directly, or if you Google Brandon Mears with Mason-McDuffie Mortgage, you'll find me.
You'll find you. Very good. Well, thank you for your time today. For further episodes of this, of Wine and Real Estate TV, go to our website. It's wineandre.com, spelled WINEANDRE.com. Thank you, everyone. Appreciate your time today. And Brandon, thank you for your time.
Thank you, Chris.
Cheers.
Cheers.